A private corporation owned more territory than most countries, commanded its own military, and printed its own currency, and nobody stopped them. The East India Company didn't start as a colonial powerhouse. In 1600, it was a merchant venture, a joint stock corporation chartered by Queen Elizabeth I to chase spices and profit in Asia. But here's the thing, the incentives were brutal. Shareholders wanted returns. The company needed leverage, and leverage in the Indian Ocean meant guns. By the 1700s, the company had built trading posts across India, the Caribbean, and Southeast Asia. It wasn't enough to buy spices, it needed to control the supply. So it did what any rational actor with a military budget would do: it conquered. Local rulers who resisted found themselves facing company soldiers. Those who cooperated got deals. The math was simple: monopoly power beats fair competition. Here's where it gets surreal. By 1765, after winning the Battle of Plassey, the company controlled Bengal, a region of 30 million people. It wasn't governing for the crown, it was governing for dividends. The company appointed administrators, collected taxes, and kept the revenue. It had its own courts, its own police, its own bureaucracy. It was, in every functional sense, a state. The company's power wasn't magic, it was structural. It could borrow money at rates no rival could match because investors believed in the monopoly. It could raise armies because soldiers were cheaper than hiring independent mercenaries. It could extract resources because it had the legal authority to tax. Each advantage compounded. But the company also faced a problem: empire is expensive. Maintaining armies, administering territories, and fighting rivals drained the treasury. By the late 1700s, the company was bleeding cash, so it squeezed harder. Taxes on Indian farmers rose, famines followed, resentment grew. The company had solved the problem of how to acquire power, but not how to hold it without destroying the source of its wealth. By 1858, after the Indian Rebellion, the British Crown dissolved the company's political authority and took direct control. The experiment was over, but the precedent remained. A private corporation had shaped continents, redirected trade flows, and altered the trajectory of billions of lives. Not through force of nature, through incentives, leverage, and the absence of anyone powerful enough to say no. So how did a private corporation reshape global trade? It didn't stumble into empire, it followed incentives. Shareholders demanded returns, competition demanded monopoly, power demanded expansion. Each decision seemed rational in isolation. Collectively, they created a structure that outlasted nations and redrew maps. The East India Company didn't break the rules, it revealed how far you could go when the rules weren't written yet. This video is for educational and informational purposes only and is not financial advice. Always do your own research. Subscribe for weekly deep dives into the economic and political forces that built and broke empires. This video is for educational and informational purposes only and is not financial advice. Always do your own research.